This week we are going to be discussing Adobe.
They've got a market cap of around £135 billion in dollars, 29% compound annual growth rate, just under 12 years.
Just remarkable.
96% of Adobe's revenue is recurring income, which for an investor, it gives a lot of stability and confidence. Currently, they are aggressively investing in AI, around $4.2 billion in this year to date.
As investors, you always want to look forward, not back.
Yeah.
So to get that growth rate up, and they need to then come up with the next thing. They've done it in the past a couple of times. Are they going to be able to do it in the future again?
Welcome to the latest edition of the Intelligent Wealth Podcast. And I'm very pleased, as usual, to have my eminent guests, Awet Ghirmay, who is Head of Research at Minerva Money Management, our fund management company, and our colleague, Carl Roberts, who's a fellow director. This week, we are going to be discussing Adobe, which is a very interesting company. This podcast is for serious investors who ideally do their own research and then are only looking at this as an additional piece of research, because we're going to offer our opinions, but don't for it by any means treat this as recommendations. Because in my experience, whenever you follow anyone's recommendations, no matter what a good investor, it invariably goes wrong. And the reason for that is your investment has to mirror your personality. And we've all got different personalities, different attitudes to risk, different timescales, different likes and dislikes. So just treat this as part of the additional research if you were considering Adobe as a company to invest in. So yes, without any further ado, let me just briefly introduce Adobe to you, say a few things about the company before we get on to our more serious researchers who are going to talk in more depth about the company. Adobe, we're all familiar with the company because they're the famous company that created the PDF document, of course. They were formed in 1982, believe it or not. So that makes it quite an old company in tech terms. And the two guys who formed it was John Warnock and Charlie Geschke. I hope I've pronounced that correctly. Sorry, guys, if you stood around. Now, Adobe has repeatedly had to transform itself, reinvent itself every 10 years because, of course, the world's changed enormously during the internet era. And so some of the products they first produced, they've had to make them more like digital, for example, from physical to digital. And now they're having to cope with AI. And so their share price has been depressed this year to date. They're down quite a lot, about 30%, I think, Awet, isn't it, this year to date? Mm-hmm. But it's still a company, as you'll find out from Carl and Awet, that is still making a huge amount of money and spending a huge amount buying back their own shares. It is very successful. The key question is it going to lag and fall behind other giant tech companies? I mean, for example, they employ 26,000 people around the world and got huge cash flows, huge amounts of money, billions and billions of dollars on the balance sheet and billions of dollars of cash flow. So it's just remarkable. Their CEO is little known. His name is Shantanu Narayan. CEO since 2007. That's quite a long stint, isn't it? Now, he's been very instrumental in helping them transform. And I always think that if you've got a company that is capable of transforming when conditions change, they adapt to change. That's one of the greatest ways in which companies and individuals, in fact, survive, by having the capability to change. And it also means they won't rest on their own laurels. So every decade they've got a challenge to overcome. We'll come into this in more detail as we discuss it further. Now, we like companies where they're run by visionary founder owners with skin in the game. And what we mean by that is that the founder owners typically own, say, 10% or more of the shares of the company, like Jeff Bezos of Amazon. That's not always the case. And in this example, the CEO only owns a paltry 0.09% of the shares. Having said that, that's still a valuation of $141 million. Well, I wouldn't mind having a tiny stake like that. And the management altogether only owned 0.17% of the company, which means $257 million. Still a lot of money. So it's not ideal, but Narayan he's got a very good track record. So not a huge skin in the game, but I think as long as the company is run the same way as a visionary founder owned, and we make exception to that. So really, for some more serious discussion, let's pass on to someone more in the know, Carl Roberts. Let's have some serious data on this company from you, please.
Yeah, thanks, Tony. Yeah, so Adobe listed in the US on the NASDAQ. Their ticker symbol is ADBE. So fairly easy to find. They've got a market cap around $135 billion dollars. Sorry. Yeah, and if we look back at their kind of past performance and share price history, so they originally listed in August 1986, became a public company. So they're quite a bit older than a lot of the tech companies we talk about today. So they've been around for a long time now. They listed for about $11 a share, but like many companies, they've diluted their share price a number of times. So it's quite difficult to track, obviously, the share price over time by the fact that they've changed the price a number of times. But if we go back to 2010, as this is probably the point at which we saw some really explosive growth from Adobe. So back in January 2010, the share price was around $32. By November 2021, it reached its peak of $669 or $670, which is a 29% compound annual growth rate, just under 12 years, which is pretty impressive. And that was mainly driven, that period, by the adoption of this subscription-based model. Because previously, Adobe products had always been, you pay for the software, a bit like Microsoft Office back in the day. You used to go and buy all the discs once, pay for that payment once, and you'd load it all onto computers. And then when you needed to upgrade it in a couple of years' time, you might buy the latest license once and then upgrade it all. And then obviously the world changed to more of a subscription-based model. So as rather than having to go out and buy the kind of software, you just get it, download it, and you'd get all the constant updates, but you'd have to pay like a monthly subscription. So that really kind of helped them grow revenue strongly. By September 2022, it dropped to a share price of $275, which is around a 60% fall in just under a year. So that's pretty scary, sort of loss of share price if you'd gone in at the peak to buy Adobe. I mean, what happened at this point? Well, it's like a few other tech stocks around the time that they got overvalued during COVID. So obviously as COVID happened, the world turned more digital, people were working from home, things like digital signatures became really popular, which is Adobe's big into. So they really benefited from that kind of COVID period where everyone thought, tech stocks got a bit overvalued. And obviously coming out of COVID, people sort of reset their valuations on tech companies. Rising competition started from the likes of Canva. If you ever use Canva, it's a very kind of cheap and simple kind of marketing graphic type software. And there was just general market declines after COVID. We had really high inflation, so business was spending less, people were spending less. So just generally consumer kind of spending was down quite a lot. And they also had an issue where they messed up a deal to purchase a company called Figma.
Mm-hmm.
So this was sort of one of their competitors at the time. They went in to try and buy them. Many investors thought they were overpaying for them. And it turned out, I think it's EU competition law made sure that actually that deal couldn't really go ahead. And it took a while to untangle. And Adobe still had to pay $1 billion breakup fee to kind of get out of that. So they kind of really messed that up. So investors didn't really sort of thank them for that. This share price did shoot back up to $617 by January 2024, but now it's back down at about $320 at the time of recording. So for a tech stock that's been around for a long time, it's actually had a really volatile ride over the last sort of 10 years in particular. So just to kind of summarize in all of that, if we look at the last 15 years, the compound annual growth rate is now 17%. If we look at just the last 10 years, it's 13%. And if we look at the last 5 years, it's actually lost you money, Adobe, and you're actually on a compound annual growth rate of minus 7.7%. So, yeah, I mean, the performance figures, it'll be highly affected by the most recent fall. Obviously, if we'd done this, say, a year ago, then those performance figures looked a lot better. But you can see there is a decline in sort of share price performance and the market's view of Adobe. And I think, yeah, Awet, you probably have a bit more to say in terms of some of the financial side.
Yeah, sure. I think if we look at Adobe historically, they have been. I mean, it's not a new company. It's an old company, been around more than like 30 years. But what we see is that historically they have been adapting to new technologies and innovation. But the biggest risk the market thinks now is AI, which is the elephant in the room. And I think AI is a biggest threat to Adobe's business model. And I think the market thinks that's the biggest risk. And that's why I think the share price has declined significantly year to date. As you mentioned, Tony, the share price is down 30%. And the market is thinking, Adobe is facing competition, as you mentioned, Carl, by companies like Canva, and the big tech as well, like Alphabet are competing, especially when it goes to like downloading files and so on. Adobe is facing competition from not just to one front, multiple front now. There's a small entrant as well that, for creating images and so on. So Adobe is facing a lot of competition. But currently, when we look at Adobe's financial, we don't see the margin is being contracting. It's still steady. But what we see is the company slowing down a little bit. It's not, historically has been growing more than 20%. But in the last few years, the growth has been double digit still, but it's around 10 to 11%. So it's still decent growth. But what we see with Adobe is it's a unique business. If you think about it, Adobe is 96% of Adobe's revenue is recurring income, which is, it gives like for an investor, it gives a lot of stability and confidence because it's recurring by nature. And I think when we look at Adobe, there is 45 million people use Adobe software, and it's deeply embedded in a lot of agencies, especially like when we talk about agencies. We do mention about Canva and, either Figma and so on. But when we look at like the biggest agencies, most of them, they have used Adobe and they don't plan to leave Adobe as a provider. So there's a sticky revenue among high agency, high quality professional content creator. Where they facing competition is among the lower end users. Like, for example, the work is rapidly changing. Content creator, there's a lot of content creation coming on, and amongst youngsters, Adobe is facing competition because most youngsters prefer to use Canva and Figma and so on because they have very interactive user experience and so on. So there is a lot of competition, but Adobe still can compete in that market by lowering price. But so far they don't have to. They are still happy to invest in AI. Currently they are aggressively investing in AI, and I will come to it later on. And when you look at them, Adobe, the business model is very, very likable. As we said, we do like companies, their business model is entrenched and we use it daily. Adobe is one of them. But at the same time, when you use Adobe, there is a negative cost of capital. And I'll explain why do I mean by that. When I say negative cost of capital, when you subscribe for Adobe software to use it for a year, you pay first. And then Adobe gets that money and can use that money to invest in the business. So it's a really good business model. As I mentioned earlier, it's recurring and you have negative cost of capital. It's a lot to like so far. And when we look at the margin and profitability, Adobe is very profitable. High margin, high return on capital and so on, and strong balance sheet and great capital allocation. But historically as well, the valuation is really low. In terms of historic, because of course, there is a reason for this lower valuation. The market thinks Adobe's, cannot pull, is facing competition from multiple front, and that's why the share price is depressed. It's trading at 20 times earning and 14 times free cash flow, and when we look at the discounted cash flow, the market is only implying 3% growth, free cash flow, which Adobe is doing aggressive buyback anyway. I'll come to that into the next minute. But when you compare it to the S&P 500, it's trading at 30 times earning. So it's still like 33 times discount to this S&P 500. So as we mentioned, it's a quality company. It's not growing significantly, but at the same time, it's trading at discount. It just gives, like, as an investor, a significant margin of safety. As we mentioned, like with all the recurring, there's a lot of to like here. And when we look at the shareholders yield, which is, Adobe is returning significant amount of money to shareholders, and, by investing in the business, paying debt and buying back. So far they have invested around 4.2 billion in this year to date. And that's aggressive, the investment in R&D and so on. And they are adapting in AI. As we mentioned, there's a fear of AI. There's a lot of uncertainty, but Adobe is investing, as I mentioned, 4.2 billion, and creating AI as well, and growing the AI businesses. So there's a lot of to like. For example, their new software AI, generative AI called Firefly, which is a generative AI for creating, editing images and text. For media, and there's a lot of AI they're creating for marketing, campaign and so on, called Gen Studio. So even though there is a threat for Adobe, but Adobe is still investing in that area, so they're not falling behind, but they're still adapting and investing and moving forward. So far there's so much to like from Adobe. At the same time, there's a bonus is Adobe in March 2024, they have proposed to buy 25 billion worth of shares. That's almost 20% of the company total shares outstanding. So this is significant, things to like from Adobe: buying back, growing, recurring income, strong free cash flow, and it's a growing market. Adobe is forecasting their market, to total addressable market, to grow to 293 billion by 2027. So I do think there's a risk here, but at the same time, the content creation business is growing, and I think all of them together will grow into this market. And Adobe still continue to grow. As I mentioned earlier, it might grow, double digit, 10 to 11%, but through buyback as well, you receive about 2 to 3% buyback. So you still get a good double digit return over long term.
Yeah, very interesting. The key question from here is this: is it in the same league as the Magnificent Seven? That's the key question, because it seems to have so much money on the balance sheet, so much free cash flow.
Yeah,
it seems destined to make at least 10% a year. I would say is it, like you just said, Awet, it just seems likely. But will it make, the key question none of us know the answer to yet is, will they make a compelling AI breakthrough and then motor up to 20% a year? What do you think, Carl?
Yeah, I think the thing with Adobe is, I think on at least 3 occasions, they have invented a product and become the absolute market leader in their field. So you think on their founding, based in on 1982, I'm too young to sort of remember it, but PostScript became the international standard for computer printing. So that was their product on launch. And then into kind of 1990s, Adobe Photoshop was the absolute pinnacle for, photographers and image editing. And then 1993, a product we all know, the portable document format. So PDFs, even today, are still absolutely industry standard for how documents are shared. So they've got a history of coming up with a product and making it the absolute market leader with a huge moat protecting it. I always think of them as a premium product, Adobe. So my usage of them, I've never actually probably paid them anything, because obviously at the lower end, it's all free, isn't it, in terms of using PDFs and then sort of the basic levels of Adobe software. But I think if you're in the high end, larger companies, big marketing companies, you're going to use the Adobe software and you're going to pay a good fee for that. So I do think it's a premium service. I think the thing, what comes next. So there's no doubting that they're a quality company from a sense of all their financials.
Mm-hmm.
But obviously, as investors, you always want to look forward, not back.
Yeah.
So looking forward, to me, to kind of get that growth rate up and to see a good growth in share price, they need to then come up with the next thing. That's what we're waiting for now. They've done it in the past a couple of times. Are they going to be able to do it in the future, where again they can deliver something that becomes industry standard, builds them another big moat, and if they can do that, then absolutely they'll continue to be a big tech company, and we'll see some really good share price performance. But it could be that they can't come up with anything new. Like a lot of companies can struggle to kind of consistently reinvent themselves. And if they don't do that, then they could still be a good quality company that ticks along, and you get a decent kind of overall share price return over the long term. So it depends what you're in it for, really. If you want a quality company that's going to be fairly consistent, good financials, fairly, you can see where it's going, then that could be a good company for you. But if you're someone that wants good returns over the long term, then not so convinced Adobe at this stage, until it comes up with something new, will be able to deliver that. And you just got to look at the volatility of the share price. Even though I'm saying it's a quality company, from the financial point of view it is, but if you've held on to that stock the last 5 years, you've had a really, really scary ride. So, which is unusual for a company with that good financials to have been that volatile in terms of share price.
Yeah, I mean, if you look
so what's your prediction for the future, Awet? Is this going to make steady growth, or is it going to make a massive breakthrough with AI? And I do appreciate my questions are impossible to answer, but I do like to put you both on the spot.
Right. Yeah, no, it's a great question, Tony. I think if you look at in the last 5 years, Adobe has been investing aggressively. The R&D is growing by 15%. So year to date, they invested around 4.2 billion, and they came up with a new AI product, 3 products. So which is, as I mentioned, Firefly, which is a generative AI for creating and editing images and text and other media, and Acrobat AI, that can assist you with PDF and other documents, and Gen Studio, as I mentioned earlier, that can help you creating AI marketing campaigns. So, and they are growing their AI businesses. So the key thing is, historically, they have been adapting to this new, new trend. The reality is, as you mentioned, Carl, would they be able to moving forward? Would they be able to adapt to this new AI wave? Of course, I believe they will adapt, but they will grow, because this is a growth area, and all companies will grow in the same pattern. And we have to remember, Adobe's, especially among high agencies, amongst big companies, is quite embedded into their ecosystem. For a lot of companies, it's difficult to move to other providers because you have to retrain other people's and so on. That could be quite expensive. So they will more likely to stay with Adobe as long as Adobe is reinventing, which they are reinventing. They are creating a new AI tool. So I'm quite optimistic. Maybe Adobe wouldn't grow more than 20%, but at the same time, I can see Adobe growing double digit growth by just growth and buyback alone.
Yeah, but aren't there, Awet and Carl, some criticisms of Adobe, particularly users, subscribers find it very difficult to unsubscribe? So ethically, there are some question marks. And personally, I hate that. I hate when a company makes it difficult, because you always are suspicious that it's deliberate to keep you as a subscriber. What do you think about that aspect? Is there any merit in that criticism?
I've not come across that, to be honest with you. But what I would say with Adobe is, if you ever used it, some of their products, they're complex products. They're premium, and they're, for people that really know what they're doing. So I think Adobe, they've been quite good in the past. It's like they know their market, it's top end. So if they're dealing with businesses that have got lots of money, then that's a good thing, isn't it? Because they're in the market where people are willing to pay lots of money for their products. Yeah. What they don't want to do is try and compete at the lower end of the market, because the likes of your Canva and Figma and things, they're just going to beat them now. Because Adobe, you've got to know your market, and you've got to know your speciality. Yeah. You can't be both. And they're a premium complex product, so they need to stick with that.
Agreed.
Not try and demote themselves and sort of say, oh yeah, we're just as good as Canva and our products, because they won't be. You know, their product is complex. I mean, have you ever tried to use Photoshop? It's like
Yeah.
you need a massive manual to work through how to use that. You've got to be highly trained and specialist to be able to get the most out of it. So, yeah, I think they know their market, and if they can stick into that market, the positive is that it's a market where people will spend lots more money.
Yeah, I mean, you could at the lower end use Canva instead, but of course, Canva has a free version, and really, why would you want to be competing with the free version? You know,
Exactly.
you're heavily into subscription base. You know, 96% of your turnover subscriptions. They've got 9.6 billion a year free cash flow. These are extraordinary figures. Just
Yeah.
focus on your market. I think you're right. So, any other closing comments, guys, other than what we've already covered? Because I think we've probably delved as much as we can today.
Yeah, I think as you mentioned, Tony, as well, Adobe historically has a bad practice of like canceling subscription, and that was
Yeah,
flagged by the regulators and so on. And I think when we look at companies, we always need to think of like they have to think about customers' experience as well. As you
sure.
mentioned, the small players like Figma and Canva, the reason they are winning, especially toward the lower end market, is because they're making key thing is simplicity, and they're making it easier
Yeah,
for people to navigate through, where Adobe is making it harder even to cancel subscription, which is one thing I really don't like. With that, you
no.
have a disruption of AI. There's a lot of uncertainties for investors.
Yeah,
But looking at all this, still Adobe, as an investment, will still provide a good margin of safety for a
sure.
long-term investor, because this is a profitable company, and the margin is not facing pressure, as you mentioned. I believe that's probably why they haven't focused on the lower end market. They know their market, as you
Yeah, they
say.
do. Yeah,
So yeah, it's a great company overall, but facing a lot of uncertainty. And then the
sure.
key caution is in investing as well. There's two things. Risk is like investing in or this is a losing opportunity, or this is a great investment opportunity. So this is what we have to assess here moving forward. And I think there is a lot of things to like about Adobe.
Yeah, agreed. So, another impossible question for all three of us, actually.
Mhm.
What do we? What's our best estimate for the kind of returns that are realistic to expect based on your own opinion? Let me kick off. I'll answer it. I think this company potentially could make 10% a year. I personally don't think it will make an amazing breakthrough to get to 20% plus, because that would put it in the tech giant category. I don't think it's quite there.
Mhm.
That's my view. But what do you think, Carl? What sort of returns do you think you could realistically make the next 5, 10, 15 years?
Yeah, I think unless
Best estimate.
unless they have a major new breakthrough, like another new product, like I said earlier, I
Yeah.
could see them being like an S&P tracker. So yeah, sort of a 10%
Okay.
a year share price return. I
Yeah.
think it's
Steady
that,
earner, we both think. So what do you think, Awet? Go on, put
Yeah.
your neck on the line for once. Come on, go for a
Yeah,
bold
I do.
prediction.
Yeah, I do think the company would grow double digit, like around
Yeah.
13 to 15%. The
Okay.
reason
That's
as well,
good.
I do think is a growing market. They're all going to grow together. Of course, the small players have a lot of advantage, and they will take a smaller market share slowly. But overall, I think Adobe would grow as well together.
Awet, I think it's the first on this show, but you're the bull amongst the three of us.
I think one thing to just point out as well is we can argue whether we believe the market is efficient or not,
Yeah.
but the market is not looking at Adobe favorably right now.
No.
So if you believe in the company, and obviously do more research on it and come to your
Yeah.
own conclusion, but you are taking a bet against the market. So what do you know or believe in that is
Yes.
different to what the market
Yeah.
consensus is? So just bear that in mind when you're
Good
looking at a
point.
company like this.
Good point. And what I personally find, I think it's when you personally use a product or service, it does influence you. And even the greatest investors in the world, like Warren Buffett,
Mhm.
do use personal experiences of companies to make a decision. It's not his only method
Mhm.
of research, but it is a critical one. Like the time American Express was in financial difficulty about 30 odd years ago, getting into a different service area which they shouldn't have touched. And some people thought they were threatened with going out of business. But Warren Buffett just went to a local restaurant and watch what the diners were paying with after having their meals, and they were all using American Express. And he went out and bought a load of American Express shares and made a fortune. So personal use is quite useful if you do have a subscription to Adobe to get a good feel for how good the company is, I think. Anyway, we'll put everything in the show notes, everything that's relevant here, including our one-page company snapshot, like an analysis of our views of the business. Remember not to take it as advice. Our next episode, we're going to cover a company we all know, Alphabet, otherwise known as Google. Please, if you're listening to this on Apple Podcasts, give us a review. We really would appreciate your support. It gets us more subscribers and enables us to invite along better guests to the show. So without any further ado, it's bye for now and have a great day. Look forward to you listening next time. Bye then.
Bye.
Thank you for joining us today. Please help us spread the word by sharing this podcast with your family and friends. And don't forget to subscribe.